It's Friday Coffee with your mortgage man, Eric, and here we go. Today we're going to talk about the Trojan Horse of credit scores, and what I mean by that is the medical collections. Eric, I don't have to pay those medical collections, right? I can ignore them. I can just ignore the medical collections. We don't need to pay them. Yes and no. And let's dive deep into the weeds here so you understand what needs to happen with collections and medical collections. And to recap the previous two videos, one, we talked about how installment loans, car loans, impact your credit scores and your eligibility to buy a home. And then we talked about credit cards and their impact on your credit score and eligibility to buy a home as well. So today we're going to talk about collections and the Trojan Horse of collections and credit scores, the medical collections. Because there's this interpretation out there, or the unicorn out there, that says you don't have to address medical collections at all. You can just ignore them. They're going to go away. You can still buy a home with having all those medical collections. And the answer to the question is yes and no. And what's the difference there? Let's dive into this. So, just because you have medical collections doesn't mean that you can ignore them. You will have a credit score impact. Your credit scores are not going to go above a certain amount. Yes, we can still get you into a home. We can probably still get you into the FHA loan, the VA loan, the USDA loan, those types of loan programs, more designated to first-time home buyers. Once you start getting into the conventional loan programs, you're going to need higher credit scores, right? And this is where the differentiation becomes a huge part in understanding the difference between these loan programs. So, yes, we can get you across the finish line without you having to address those. You can ignore them, for lack of a better word, right? We can get you into that home. But at some point, you probably want to address them. Why would you want to address them? Because at some point, you're going to want better loan programs, better interest rates, lower mortgage insurance, no upfront mortgage insurance premiums. You're paying dearly, believe it or not, for the luxury of ignoring medical collections, or any collection for that sake. So keep that in mind, that you can ignore them just to get you across the finish line, to get you into the home. But at some point, you're going to want to address them. And here's a great example. This came across my desk yesterday, which prompted me to talk about the Trojan Horse of credit scores today, medical collections. Husband, wife buying a home, $400,000 home. Pretty significant size home. The husband, impeccable credit, 780 credit scores, right? No issue there. The wife, one of her bureaus is a 790. The other two, 690s, and 691, 694. I'm like, what's going on here? There's a 100-point discrepancy here, on the wife's credit. Oh, we have 4 medical collections. 4? That's it. Medical collections. Everything on her credit is impeccable. No 30-day lates, no bankruptcies, no foreclosures, right? There's nothing else. 4 medical bills. And guess what? Those medical bills added up to about $2,700. That's it, right? So not a huge amount. So what does that mean for that particular couple? Look, I'm still approving them for their home loan. They're still going to close on their home loan, but the difference in the interest rate between what would have been a 791 is now a 694. The difference in that rate is 0.5%. And they're not putting 20% down, so they have mortgage insurance. So their mortgage insurance is also higher now monthly as well. There are other things like their homeowner's insurance is probably going to be a little higher, right? There are so many things that are going to impact them with their home and other things in life, because they've chosen to not pay the medical. And when I spoke with the lady about it, she's like, well, I just didn't think we had to pay medical collections. I didn't think they mattered. And in essence, they don't, but they do, right? You're still going to get into the home. You're just going to pay a higher rate for it. Now, this family makes about $14,000 a month in income, right? Do you think we could have, settled that $2,700 in medical debt year ago, 2 years ago, right? You see where I'm going with this. Did that really make sense? And all that had happened here, they had bugs put in their ear that were telling them, oh, you don't have to pay medical collections. They're irrelevant. You can ignore them. There's no impact there. Now, keep this in mind. You probably have also heard this: if you pay off a collection, your credit scores go down. Yes and no. Again, yes and no. And here's what I mean by that is that if you are a 580 credit score, a 614, a 642, right? You're in that range and you're just trying to get your scores up high enough to get across the finish line for home ownership. Yes, paying a medical collection could, in essence, drop the score temporarily for a couple months, maybe a half a year, before you get those score points back. But there's a difference here. If you are a 690, 705, 722 kind of credit score person and you're paying off your collections, your scores are going to go in the other direction, right? So, and keep this in mind. Why don't people tell you that? And here's why, is because the majority of people that are in credit restoration, getting their credit cleaned up and repaired, are not the 700s trying to get to a 740. They're the 590s trying to get to the 640, right? So you have to understand that there's two different games that are being played here. And look, we obviously want to get you into a home, but we also want to get you into a better loan program at some point in your life. There's no reason why you should be paying higher rates, higher fees, worse programs, right? Mortgage insurance premiums for your entire life. We should be able to help navigate you through this in life, get you better credit scores, set you up so you can get better programs, better interest rates, right? That's what this is all supposed to be about. Not just one transaction, but helping you navigate this home ownership thing for the rest of your life. So collections, what did we learn here? Don't fall for the unicorn. It is a Trojan horse. Ignore medical collections. They don't harm you. You can still own a home, right? Yes, you can. But you're going to be stuck with that kind of loan program for the rest of your life if you keep ignoring collections and medical collections, right? Where do you want to go? Do you want to have the best interest rates, right? Do you want to have the best insurance rates? And you know what I'm saying? You want to have the better programs. With that said, it's Friday Coffee with your mortgage man, Eric, 602-757-2171. Have a great day. We'll see you.